Hello. So today's show won't be a normal show, right? Today's show is more of a meet and greet kind of a play. And I'll just check myself on this show. Yeah, my audio is okay on YouTube and on LinkedIn. So I will begin. I don't expect anybody to join me today, right? Very few people, if at all. A lot of festivities. Bum bum bum, bum 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 bum, bum 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 bum, bum 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 bum, bum bum bum, bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we gotta follow tradition, as you know, our sweet and sacred tradition of the simultaneous sip. We'll all sip something together and bring us good luck, as it always does, without fail, every day. And all we need for the simultaneous sip is a copper mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like hot water with black pepper in it. And here we go. Beautiful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. And that's such a beautiful thing to say. With that out of the way, let's have it again. Sublime. Yeah, now we can talk. So this isn't a regular show, as you know, as you might know. The press is down today. Last night, the press wasn't working, which means we didn't get papers. I don't have the material, which I usually have. So it's more of a happy Diwali, enjoy your day, enjoy your festivities kind of a thing. I didn't want to just cancel the show altogether because it didn't feel right. Even though there wasn't any material, I thought we should have we should cover a previous bunch of discussions that we left hanging. So last night, gold went up yet again. Gold is at, and people found out the reason why gold went up. So they found out that gold bonds, Chinese gold bonds, are really clicking it. So what China has been doing is it's been issuing sovereign gold bonds, and the graph is like a straight line up, and it's just extraordinary what it looks like. So when people are now beginning to realize that the reason that the gold has been up or has been growing up at this rate may be because of Chinese intervention or Chinese essentially moves on gold, right? So that's what's happening. Uh, there are a few tweets which says Chinese gold warrants are picking up, right? China picking up, central banks of course picking up, quietly buying gold at the fastest pace in 55 years that began in 2022, and all of that is leading to what it's leading to right now. So the price of gold getting up, China is behind it, right? Shanghai gold warrants. So if somebody wants to know, gold warrant on the Shanghai Futures Exchange is an electronic certificate representing the ownership of a specific quantity of physical gold stored in a Shanghai FE approved delivery warehouse. These are called standard warrants, and they're used as the basis of physical delivery against gold. Each standard gold warrant typically represents 3,000 grams of gold and purity on origin. Yeah, so that's why they're surging. Robust central bank gold purchasing, notably by People's Bank of China, and intense price volatility, leading to gold picking up. So why is China buying gold? Why is China buying so much of gold all the way? Well, of course, every central bank is preparing for de-dollarization, and the country to most benefit from de-dollarization is China. According to Mr. Ray Dalio's analysis, China is the next superpower. It's time for America to be the next UK and China to be the next US. So if China gets the world gets de-dollarized, China gains, and that's why probably China is bulking up its gold reserves. The problem is that US still will have 3x the gold reserves China has, right? So how does that work out? Obviously, these things are very, very complicated, but that's the reason why gold is so huge. So if you look at that graph right now, I wish I could share that graph. Can I share that graph online? Studio mode. Okay. Duplicate sources. I can try something, but that could be complicated. No. So anyway, if you look at that graph, most of the buying that's starting to happen has happened since July 25. So July 25, the line is a straight line. July 25 to Jan 26, it's just a straight line, and there's nothing like this in the past. So if you look at 2019, the graph is like this. It's flat, then it goes up on July 24, and then July 25 it goes up as a straight line like nothing before, right? So that's why gold is picking up, and that's the reason. Speaking of gold and whatever is happening, AWS went down yesterday. AWS went down, and with it went most of the internet. All of the internet essentially came down with AWS. AWS essentially proved its centrality to the entire internet play. Basically, everything went down with AWS, but Twitter didn't go down. X didn't go down. X stayed intact, and people were confused as how X, as to how X essentially remained immune to the AWS outage. Turns out that uh, X has basically uh, created its own servers, its own farms, its own tech, right, to stabilize itself from future outages, and also to have to not be dependent on AWS. So X has a couple of servers in US, and Elon Musk, Mr. Musk, actually tweeted something that the whole of internet stands on AWS, and X was intact. So that was very interesting, very interesting. Speaking of what was interesting, despite AWS's outage and despite the whole internet going down, essentially, Amazon's stock went up. Right? So the king wasn't affected by the kingdom going on fire. That was the Amazon Web Services' impact on the whole internet. The stock went up. Mr. Sumant Kumar asks, Happy Diwali, Mr. Sumant Kumar. Good morning. Is it still a good idea to buy gold at the current price for someone who missed the earlier rally? So, as Mr. Kumar, you might remember, and old viewers of Thinkers Frequency remember, buying gold is a hedge against falling financial markets. Buying gold is a hedge against falling fiat currency world. Buying gold is a hedge against finance instability, global finance instability. If anything happens tomorrow, everything might just get deflated, right? The stocks might crash, the bonds might crash, the dollar might crash, the rupee might crash, the gold stays intact. That's what makes gold gold, right? So buying gold is a great idea, not to make money, but to save money at the event of a black swan. That's the thesis of Mr. Nassim Taleb. We've been discussing Mr. Nassim Taleb's work a lot lately. He's gonna get a lot of credence yet again. You know, when Mr. Nassim Taleb essentially becomes important, he becomes important when crazy events happen in the world, right? Like a crash happened in 2008, he wrote Black Swan in 2007, right? When COVID happened in 2021, no, 20, he essentially became important because in Fooled by Randomness, he had written that the world is most fragile in terms of pandemics in this area of hyperconnectivity and extreme volatility and extreme connectedness in every way, right? Because of ubiquity of international travel. So he writes these things, and so buying gold is a great idea. People are saying that gold might just it's finding its value again, and that's a fair thought, right? Mr. Raju Kumar has an interesting comment. I would say buying gold is always a good idea. At least 15% of investment should be in gold. That's exactly what Mr. Ray Dalio just pointed out. That 15% should be gold, right? People are saying that you could keep it as much as 25%, and that's what's happening. So precious metals are going up, and they are 15 to 20%. So, coming to an investment strategy, if we are talking about Mr. Nassim Taleb, I'll point out an investment strategy that he professes. So he calls it the barbell strategy. Okay. So what does he mean by the barbell strategy? What he says is that you keep 80% in the least risky assets. Okay, least risky, like treasuries, US treasuries, and gold or whatever, like least risky assets, you keep 80%. And then 20% you keep in the riskiest of assets. Something like an eventuality of a nuclear war playing out, or a pandemic happening again, or something that is like absolutely unlikely and very, very risky. And you spread 20% of your assets there. So what happens is the least risky things just pay out the regular yield. And if something bad happens, even 1 or 2% of your allocation leads to basically all the wealth, right? So that's the strategy, or let's say philosophy, that he professes, barbell strategy. But I'd like to tell you that no matter how brilliant Mr. Nassim Taleb is, and no matter how great he is, he's not a very he's not a trader of much reputation. His trades aren't public. His fund uh, isn't. I mean, his performance as a trader isn't public, so nobody knows how much money he made or what his positions are. So he, while professing a lot about markets and fragility and anti-fragility and black swans and giving the world a lot of philosophy, nobody knows how much money he's made or how he compares to, let's say, the index, or let's say to Mr. Warren Buffett or Mr. Ray Dalio or whoever else, right? So you don't know. So you got to take something with a pinch of salt. But there is a fund that he's directed with, he's related with. I guess it's Emporsa. Let me just check. Nassim Taleb fund. What was the fund? Empirica, Universa Investments. Great. So Universa Investments is a hedge fund that is directly responsible for, right? I mean, he's basically the strategic advisor in that fund. So it follows his philosophy, Universa Investments, the things that go wrong. So they invest in tail risk events and so on and so forth. So they did well in COVID. Of course, they were up, way up, and they are okay. So that's what's going on. Gold, buying gold. Short answer: buying gold is always a good idea. Even if you lose some money with gold, let's say even if gold gets corrected tomorrow, how much will it get corrected? Right, 10% max. So that's all. That's all you have to lose, 10, 12%, and that's not guaranteed. I mean, maybe it just falls like 4%, who knows, right? 4%, 5%, then it stabilizes there. 10% is quite a fall, you don't expect that. However, if something bad happens, if shit happens, right, then it'll all be gold that you'll have, because your stocks will fall 50%, 60%. That's guaranteed. So the maximum gold can fall is like 7, 8%, 10%, right? And the beauty is that previous trends, whatever, again, not doing analogy thinking, but the fundamental is, if you think first principles, when crash happens, right, everything starts falling, people start allocating more and more money to gold. And then when everything bottoms out, when the market's like dead under the water and then it's going to grow back, that's when people start exiting their positions from gold and start putting them in the market, in different markets. And that's when things start going up for the market, right? So that's what happened in the previous 2008 crash as well. So gold started picking up, and peaked at 2011-12. That's when the financial world was sort of stabilized, and that's when gold fell, and everything else started picking up. So buying gold is always a good idea, because even if the crash doesn't happen yet, it'll keep growing till the crash happens, and even after the crash happens. So it's a very predictive way of, it's a leading indicator of whatever is happening. So that's cool. That was gold. We've talked about AWS. We've talked about Twitter. We talked about Nelco yesterday, whether Nelco is a good bet, right? So I did some reading of the situation. Nelco is a very small company. I noticed it did a revenue of what, some 300 crores last year, right? And the company is valued at somewhere around 18 to 1900 crores. That means that the company is getting a price to sales of 8, right? 8 to 9, which is not undervalued, which is not overvalued. However, is it pricing in the SATCOM revolution of tomorrow? That is a question that we need to ask. Is 300 crores the scale which has a lot of scope to grow? Definitely. But does Nelco have all the muscle where it can actually grow? Uh, that's somewhat doubtable. So at this moment, the SATCOM sector is 2024, $2.3 billion, right? And the forecast is, KPMG forecast is $20 billion. That's 79% growth, 5x in 4 years, right? And it can grow even bigger. So it can go like 10x in like 6, 7 years, right? or maybe 8 years. So there's a lot of scope to grow. And commercial broadband is nothing. It's like 76 million right now. Commercial satellite broadband market, right? It's 76 million right now, according to there is a research, and it's supposed to grow to $250 million, from 70 to 250 million, right? That's 20% CAGR for the next few years. So and are there other players who can do something like Nelco? Yes, there are. There's Hughes Communications. That's a Airtel joint venture. There's Tata Communications, right? Then there's, of course, everybody else. So it's not like the company has a monopoly, or the company has a clear case, uh, situation where it has everything. It has maritime aviation and BFSI government networks. So it can do something like that. But can it double its revenues? Can it double its market cap? I'm not clear yet. But is it definitely a buy, which can have some sort of modest returns? Like, definitely. That's for sure, in my opinion. So let's keep that in mind. Let's keep that, keep Nelco in mind. Let's also track other companies. Mr. Sumant Kumar says Avantel Limited is one more player. Yes, so it's not just those players. There are a lot of players. Hughes, by the way, is also a company which can be thought of, right? I don't know if Hughes. Uh, uh, One second. So basically, Nelco isn't like that big of a deal right now, right? It's a private company. So Hughes is a private company. That means in a listed play, not many people exist, right? And if that is true, uh, Nelco is sort of a good bet, right? It's a sure bet for a modest return. Though I'll have to do a bit deep, much of a bit of a deep dive with Nelco. I want to read its management calls. I want to read what these people are thinking, right, in order to make the bet. So if you look at what we did, where we went right, with, let's say, Aether, right? We knew about Aether management history, how these people grew, how these people built scooties, how their product stands differentiated from the rest of the market, how, what's the shareholding pattern, what's the management vision, where the market stands right now, where they stand right now, how the competition is valued, how they are valued, how there's a swip. And that was a clear tell that, it's a to explain 100 days, right? In 2 quarters or 3 quarters, it's gonna double. And that's exactly what happened, because we had that sort of knowledge base set with the Aether. I don't have that knowledge base with Nelco right now. So I'll have to do a bit of a bit of more research, and then I'll be able to tell you my thoughts. But overall, it looks like sort of there, right? So I mean, it doesn't look like a money loss kind of a bet, essentially. Uh, with that out of the way, some comments. Happy Diwali, Nisha, everyone. Mr. Sumant Kumar says, Happy Diwali, everyone. So everyone can respond to Mr. Sumant Kumar. Thank you, Nishant, for your time and effort. Excellent work. Thank you. Thank you so much. So gold bees also makes sense. Also, silver acts differently. It recently fell 6 to 7%. So Mr. Abhishek Sharma says gold bees also makes sense. I don't understand. Gold bees? Is it something I'm missing? Silver acts differently. Yes. So silver is slightly more volatile than gold. Silver's supply chain is different than gold. Silver's, you know, essentially, uh, the core supply is very different from gold. Silver's qualities are different from gold. Silver is not gold, but silver is a second proxy to gold. And silver fell this much because silver rose it had a very volatile beginning, right? So if you looked at silver, it went up 8% in a day. So if silver went up 8% in a day, that is not how precious metals are supposed to work, right? So there was some volatility expected with silver. However, gold Bs, okay, gold ETFs like yeah. So gold ETFs is basically proxy of gold. So that's not anything different. So my US investor who liquidated all his stocks and is now on gold, he's like SLV is the silver ETF and GLD is the gold play that he buys, right? So that's what's going on with that particular play. And if you look at yearly returns, so how much did gold return in the last year? Some 85%. Silver is slightly higher than that, it's like 93%. So whatever volatility you judge on an intraday or like an intra-week basis, if you look at the sum, it's pretty sorted, right? So Mr. Abhishek Shinoy says sovereign gold bonds works or ETF, both work essentially. Sovereign gold bonds or ETFs, they both work. Shanghai, we talked about warrants just now, right? Physical gold bars also work. Everything works when it comes to gold, of course. With that, we've talked enough about gold. We should mention something related to INS Vikrant, right? INS Vikrant. Mr. Modi had celebrated Diwali with INS Vikrant. Now, a lot of people talked about INS Vikrant as a failed expense because aircraft's carrier, they said they would be a wrong technology to back because they're, you know, a lot of they can be targeted easily and so on and so forth. Well, that is not the right way to think about aircraft's carriers as a tech or as a strength. Aircraft carriers have a very important role to play in expanding the reach of the naval and air force, naval air force and air force, right? With that, you are very limited to what your coastline essentially is. So you need some sort of bracket. So if you study a book, if you read a book called The Bomber Mafia, okay, so the Bomber Mafia or any war book, essentially, there's Team of Teams, there's Mossad. There's also Startup Nation. It also has a lot of. So when marine fights are happening, it's very important to capture some bases which expand your reach, where you can do refueling. So in U.S. and Japanese war, I don't remember the particular base, the island. It was a very small island, but it was key in the battle of US and Japan, right? And Japan couldn't take that island. It basically lost that island. And when it lost that island, the fight was in Japanese shores, essentially. Because then US made it their base and it had an edge in attacking Japan. So what aircraft carriers do is that they provide some sort of reach to the Navy, which is very important, and Air Force, of course. So Mr. Modi had a very good show of strength when it came to INS Vikrant, and that again, he spoke about, a very interesting statement that he stated in that particular speech was that world's 60% of trade happens through Indian Ocean. What do you think it means? What do you think it means when the Prime Minister of India says that 60% of the world trade passes through Indian Ocean? What do you think it means, folks? Do you read it as I'm reading it? Do you read it as like a strategic read of the situation would be like? What would you read it as when he says that 60% of the world trade passes through the Indian Ocean? What do you think he means with that? Any question? Any answers? Good news for shipbuilding companies. Well, that's definitely true, Mr. Sumant Kumar. But the actual news is that it's leverage that India is trying to talk about. That since so much of it's like all the straits that these countries have, these Egyptian straits and so on and so forth. when your waters lead to a lot of trade, right, you invariably have a lot of leverage. It talks about leverage that you have, and of course, how you intend to use that leverage. Power projection, pitching Indian importance, says Mr. Abhishek Sharma, and that's correct. That's absolutely correct. So they're saying that $70 billion that we spend on shipbuilding every year, sorry, we spend on foreign ships every year, that's soon going to be history, and we're going to be making a lot of ships. So it's a big target, and we also have a lot of leverage. So that was very important, I think. Right? It was pretty interesting. Whatever happens, and right. So that's where we are going. If you read Mr. Ray Dalio's statements, he says something, in the related space when we're talking strategy and when we're talking war. He says rapid rise in US government debt is creating conditions very much analogous to the years leading up to World War II. So, if you read his book, the latest book, The Great Debt Cycles, I've gifted that book to many people. So it's a good book. And he says, whenever a country is losing its relevance, war is what invariably happens, and so on. But the problem is that is it's analogy thinking, right? It depends on a lot of things: how wars shape up, who's the leadership, what options does the country have, and so on and so on and so on. It's not just because there were World War Two, right? Just because World War Two happened, just because Hitler happened, doesn't mean everybody who is a vegetarian or who has a dog also has a Hitler, also is Hitler. So there's a problem with that analogy. However, the debt situations definitely call for more and more defense spend and defense focus, which is exactly what India is talking about. Let's hope India has that kind of play. Speaking of defense, nothing is clear what's happening with Hamas and Israel. The situation is pretty shitty, right? Also, what is shitty is the Venezuelan and U.S. Situation. So the Venezuela supplies a lot of drugs to U.S. and what U.S. started doing was it started blowing up ships of Venezuela entering U.S. These were drug cartel ships, and now things are flaring up there as well. So it's a very weird situation in that area as well. Amidst all this uncertainty, what's intact is humor. How is humor intact? Because there's a No Kings protest that's going on in US, and you know what's happening in the No Kings protest? They're actually uh, basically protesting against Trump, saying that he's like a king. And what Trump has done in response is that he came out with an AI based video where he's in a fighter plane, and he's flying that plane, and that plane comes over these protesters, these hundreds and thousands of protesters, and it's dropping shit over these people. So it's literally dropping shit on these people. So he made an AI video where he is dropping shit on the protesters managing the No Kings rally. So people are calling it crass. So so you got to so you got to watch that video. It's a lot of fun, right? And people are saying that Trump is attacking us by creating these vulgar imageries, by creating AI based videos where he's dropping shit over our heads. And it's literal. You can see muck falling over their faces. And then JD Vance doubled down on it. Mr. JD Vance, the president, he sort of created another video where they're dropping more and more. So humor is consistent. Humor is very important. If it's not funny, it's not life. So Trump takes those things very seriously, right? So humor is pretty solid, and right, that's what's going on. we've talked about China, we've talked about the whole AI bit, we've talked about how whatever's happening in the GPU space. So we're not going to repeat ourselves. This is pretty much it, folks. We're going to end early. This was supposed to be meet and greet kind of a thing. No proper show today. Press is down, so no papers. No Economic Times, no Business Standard, no Financial Express, no nothing. Right? Press is down, and that's sort of weird. I like, what I think, what I've learned is no matter how good internet is at giving information, nothing beats a good publication, a newspaper. Firstly, because everything is very organized. You know what you're wanting to read is not the only thing you get. The problem with internet is that it creates a filter bubble. If I want to read about something, it'll get me down that rabbit hole very deep, right? But I lose out on a lot of things which I'm not interested in. What a newspaper forces you to do is, even if you're not interested in something, it exists, and your eyes go there, and it's important. And because of that, you're being able to connect other things with things that you're not interested in, right? So as Leonardo da Vinci sir said, realize that everything connects to everything else. That sort of happens very well with newspapers, good newspapers, especially finance and business newspapers, right? And without that, it's just what you're interested in. So I'm a big fan of newspapers, and today we have no newspapers. So the new Thinkers Frequency episode sort of dries down. Newspapers make you aware, internet gets you lost, says Mr. Yogendra Pratap Singh. Very well said, actually. Very well said. Very, very well said. So you can go deep into the internet, of course. There's a depth problem with newspapers, right? Because they can only tell you so much. The space is limited. However, the breadth of your knowledge really gets very, very wide and deep. So with that, I should come to the end of Thinkers Frequency. It was a happy Diwali session, if you may, right? Not a proper episode, but I hope you had fun. I definitely had fun. I loved it. Thank you so much. I didn't think anybody was gonna join in, right? I never thought anybody was going. So I basically didn't do a sound check with people. I just checked myself. I thought, must have slept late last night, Diwali and all, right? So I thought we won't be here, but we are here. It's very nice. Thank you so much. So I should thank Mr. Sumant Kumar, Mr. Raju Kumar, Mr. Abhishek Sharma, Mr. Abhishek Shinoy, Mr. Yogendra Pratap Singh, and everybody else who joined, right? It was lovely talking. Happy Diwali. Happy Govardhan today. Today is Govardhan. Happy festivities. May the days just keep getting better. And I'll see you tomorrow. Same place, same time. So it's 8:50. We're gonna punch in. We have some time to punch in. I wish you a beautiful day personally and professionally. I'll see you tomorrow. Same place, same time, hopefully. Bye-bye. Take care. Great episode, says Mr. Rajakumar. Mr. Abhishek Sharma says, thank you for your time. Have a great day. Have a great day, everybody. Take care. Bye bye.